am the Einstein of Wall Street. And this market has given us one of the most extraordinary first half of a year, I would say perhaps in history. Every possible thing has been thrown at this market. And yet the market continues to trade at record highs. I just wanted to give you a couple words that I think describe the last 6 months of this market. Vicious, shocking, explosive, wild, jaw-dropping, alarming, unhinged, outrageous, unspoken, brutal, insane, and delulu. Ladies and gentlemen, there's nobody better to address the delulu-ness of this market than my man Tim Anderson. How you doing? It is a Wednesday in July. We've had a couple of weeks where the market really was indecisive about what to do. Then we suddenly became the breaking news thing again because we actually oil tipped and dipped into a pre-war level of 67.39 to be exact, and hit a technical level. Oh my God. Hit a technical level, sorry about that, and bounced back. And then over the last couple of days, as the market was sort of inching its way up in oil, and it was a little bit disconcerting because we thought we had seen the end of that 90s and 80s, right? Because for the longest time, it was really the market was trading oil goes up, market down, oil down, market up type situation, and there was nothing else to deal with. But now we are having this really elevated level, especially because Mr. Trump just yesterday said that he's going to install a 20%, basically a tariff on oil, all oil that's coming out of these Straits of Hormuz. And that made oil up $7, $8 yesterday. And so, you know what? There's a lot to unpack in what's going on. And the market it opened sort of, lackluster, rallied a little bit, but we've just had a little bit of a recent sell-off. Nothing to write home about, but it's something worth addressing. What do you think? What's going on? Give me the oil trade for you as you see it, because talking about the fact that Mr. Trump decided to dip his toe back in the conflict.
Yeah, but that 20%, he's already eliminated that 20% tariff.
He changed his mind.
No, he didn't change his mind. He said what he's going to do is he's going to trade that off for investments that the Gulf countries are making in American ventures, joint ventures with
so
us.
He came up with an economic plan.
Exactly.
Gotcha.
Exactly.
Oh, I like that.
He's
That's
converted that from a 20% tariff or tax, as some people would say immediately, to, look, these countries are going to do a lot more business with us, they're going to do a lot more trade with us, and that's going to wipe out the 20% surcharge on boats going through the strait.
We did once again re-engage the conflict.
Right. Of course.
The other day, what was basically said was that that Iran does not understand anything but war, and so we're going to start bombing.
And he's speaking to the nation tomorrow night, I believe at 9 o'clock. That's usually the time they always speak.
Okay.
And I'm sure what he's going to do is prepare the country for the fact that this is going to accelerate even at a much more intense level over the weekend and next week.
Wow.
Because he has tired of negotiating with them, having a deal, and having them break the deal.
Right.
So it's just going to be, balls to the wall,
exactly.
obliteration.
Now, we did have an interesting comment by the Chancellor of Germany at the NATO conference saying that, you know what, I'm going to be the first one to step to the plate and admit that we have not been participating in the cost of NATO.
But we will going forward.
We will going forward.
Yes, so that was
those are good things.
That was very positive.
Okay, but we're in give me, if I were to,
oil
to have you on.
Oil has rallied from 70-ish to 80, 82-ish.
Right.
It's not up in the 90s.
Okay, well,
but it's
up $8 yesterday. Those are big moves.
Right. So I think if people felt that this renewed war effort was going to be a long, drawn-out, months and months and months type of an event, oil would be 100, 120.
Right.
People don't really believe that.
Okay.
This is like a jump, a knee-jerk reaction to the fact that we're reaccelerating the military part of the campaign. There's going to be some bombs going off, and there's going to be a little bit more destruction of Iran's infrastructure because they haven't learned how to play.
Very pinpointed.
They haven't learned how to play nice yet.
Gotcha.
And they have no intention of doing so until they just get to the point where they have no other option but to cry uncle.
Right. It's clear
so
that the
that's where we're
president
going.
did not want to get drawn into a long thing.
Right.
They're keeping us in a long-term thing.
Right. That's
and so he's
their
basically
objective.
going to shut that
exactly.
thing down.
Exactly.
Besides that, earnings season is now up. Listen,
Yes.
we already, I think we had a little chat, you and I, about the end of the first half of the year.
Yep.
It was extraordinary.
Yep.
First couple of days of July was a little bit lackluster. We're trying to find some direction. Some of the days were constructive,
Yep.
right? We did have
Yep.
a lot of those days where it was up 300, down 300, yet the advance versus declines were 50-50, showing us that there is a lot of rotation coming in out of, we've seen a lot of movement, out of compute into memory, out of memory into software, out of software into chip,
Yep.
out of
Yep.
chip
There's
into
this
tech.
constant rotational move
And
within the tech sector.
Correct.
And what's going on today is that the chip stocks and some of the NVIDIA-related stocks
Right.
and the memory stocks are down.
Right.
But the Mag 7 stocks,
Right.
Google,
Right.
Apple, Microsoft's been hit the hardest because it's a lot of software. They're all up 10 points plus.
Wow.
Now, that's not a huge percentage move because
I
they're
know.
$300, $400
Right.
stocks, but it's still 2 to 3%.
Okay, that's interesting.
And on a day when tech looks to be struggling, if you're looking at Micron, SanDisk, NVIDIA, AMD, et cetera, et cetera. So
Right.
this is, it's
a
going to all
constant
change
movement.
again
People are just trying to
tomorrow.
position themselves
It's
into-
just almost a constant daily,
it is.
2 or 3 times a week it rotates. And I think, look, these stocks have had massive runs.
Massive,
Okay,
massive.
so there's no doubt that some portfolios are
A little over their skis.
are readjusting their mix a little bit.
Yep.
When the software stocks do really well, it's almost like a value type play.
Okay.
When the memory stocks do really well on a given day or two, it's in response to earnings and statements from within high-level people within the sector that, look, this demand for memory is going to go on well into 2028,
Okay.
which it very well might. But these stocks have still had massive runs. And some people, like a little bit similar to what we had in January, some portfolios that aren't necessarily tech-centric
Right.
or tech-driven are just a little bit overweighted. Not because they bought too many of these stocks, but because the price appreciation has
Right.
been so astronomical.
Right, and that's what we've seen throughout the year. Hold on a second. Talk to me about, let's just drop away from that for a minute. Talk about earnings.
Earnings.
We're just getting into
That's
earnings.
exactly where we're
Out
going to
of the
go.
gate were the banks.
The
Talk to me.
banks had great earnings. Now, we got a much stronger move from Goldman Sachs,
Right.
which just had absolutely phenomenal, blow you away earnings.
Explain to me this. People need to understand that the earnings
Yeah.
we're coming out
Yeah.
of Q2. Right, that's the earnings for them. Right, that's what's being announced now.
Right.
And that was
Right.
where
So
where
JP
were they
Morgan-
making their money in Q2?
Just in,
Like deals or
loan demand and deals,
right, and a lot of stock movement, a lot of stuff like that. I mean,
so
just for the
the
lay
capital
person.
markets activity
Right.
that they're all involved in now, and Goldman Sachs. Look, the SpaceX deal was a huge revenue
Yes.
generator. I'm
Yes,
sure
that
that
was a
every
big part of
other
it, yeah.
big ticket IPO,
Right.
Goldman is involved in one way or another.
Yes.
JP Morgan has a little bit of involvement, so
Right.
does Citigroup,
Yeah,
so
yeah,
do
yeah,
all of
that's
them.
what it is,
Now,
that's what it is.
Citigroup and JP Morgan had great earnings also, but they had very, very
Across the board,
strong
great bank
Q1 earnings,
Okay.
and the bar was very, very high.
Right, that's why I
for
kind of
JP
thought-
Morgan
right.
and for Citigroup. They didn't have that much of a move, but still their underlying fundamentals are very strong
Spectacular.
going into the end of the year and
were you
into
confident that was
27.
going to be the case before the earnings came out?
For the banks, yes, because I think the economy is very strong.
Okay.
And I think that earnings across the entire S&P 500
Right.
are going to be very strong. Now, the bar has been, very, very high for chips and memory and parts of the tech sector.
right.
So that's a different a level
Right.
there. But the rest, you're starting to see definite improvement in companies' bottom line from AI infrastructure, AI devices,
correct.
procedures that companies have instituted into their operating systems, even if they're not like selling. So that's a
we
benefit from AI for companies that are not just selling chips into the sector.
So let's explain that to everybody, because what I've talked about with Dan a lot, right, is the fact we went through all that phase where we were talking about the data centers, and because of necessity to grow on GPU, the secondary and tertiary demand by the smaller guys, that's why we need GPUs and all that. And the bottom line is, when you say that we're going to be building data centers, it's 5 years out. People are thinking, well, how could it affect the economy now? Well, it does, because if you're just let's be as basic as we can be. If you're building a data center in the middle of Idaho, right, that's going to be completed in 5 years, well, on the way there, look, you're talking about I can be as small as just saying that the diners that are going to be feeding the workers in the construction, all of the transportation and the AI logistics to get this thing done. I mean, the whole effect.
The subcontractors.
The whole effect that this is all the growth and all the landscape and all the ecosystem around building one data center and more all over the country has a huge effect and an uptick on the economy, because it doesn't happen in the air. People are going to be employed, people are going to be eating, people are going to be driving, people are going to be, all that stuff goes into that. And so the positive effect of building a data center in the middle of Main Street, USA, is going to have a really large effect across the board on the economy of growth. And so figure, if we're going to be doing, that's one data center, well, we're going to be doing tons of them in small middle America. Right now we know that people who are living paycheck to paycheck are struggling to a certain extent because of the inflationary implications of the Middle Eastern conflict and the price of oil hanging out above 80s and 90s for those 3 months, right? However, we are going to start to see some positive effects on a Main Street America economy by the ramifications of AI.
Just as an example, there's Microsoft and Facebook has said that they project that we need an additional, I've heard crazy numbers, like 500,000, an additional 100,000 electricians. An additional 100,000 trained electricians. These are going to be $150,000 a year jobs, if not more. And those people need to be trained. They need to go online, and they need that's a 6-month to 18-month process. But it's going to be very additive to the economy. And it's going to help the productivity. And in fact, in his testimony either today or yesterday, Kevin Warsh, the new Fed chair, said, there it is right there, I believe productivity improvements over time will be structurally disinflationary.
That's an amazing comment.
What this is going to do is that this is going to blow to smithereens this idiotic economic mantra that certain people at the Fed and in traditional finance have had for decades, that economic growth is inflationary. That you can have economic growth or you can have low inflation, but you can't have both.
Twain should not meet. You're so right.
That is idiotic thinking. Yes, it is. Once you get that hockey stick effect from productivity into the economy.
And that's where that K-shaped economy comes from.
Well, that K-shaped economy is the K-shaped economy is a whole misnomer. That's basically saying that people at the very high end are doing great and everybody else is doing terrible. I don't believe that's nowhere near reality.
Okay, so
and it's going to and look, people in the middle class, lower middle class that have a marketable skill are going to benefit tremendously from the economy. People that have no interest in working and are sitting at home on their couch are not going to benefit.
Gotcha. Okay, I love that. Now, after the banks, who's next with earnings?
Well, industrial America.
Okay, once again, also to be benefiting. Now, how do you believe they did in Q2?
I think that you're going to have, look, there'll be some special situations of some companies that have an issue or two. We saw a big negative pre-announcement from IBM. An announcement that decades ago would have hurt the market significantly.
Because IBM is also one of those stocks that just
used to be a market driver, no longer is. It's a different world. It's a different economy. It's a different tech.
This is not your
environment.
grandfather's stock market.
So you're going to have some one-offs, but I think in general, earnings are going to be good.
Okay.
So, look, you can
it.
talk about there'll be other financials that report.
Right.
There'll be other major industrial companies that report. There'll be chemical companies, mining companies.
Right.
There'll be other,
There'll be one-offs.
We'll have earnings season. We're in the midst of a very significant earnings season for the next 3 weeks.
Yeah.
That'll cover 80% of the S&P 500, and we'll just have to see where we are. Now we had a little bit of selling today, but it's not really. It's just really at the margin. If you look, the chart that they're showing looks like we had a steep decline. It was worth about 150 points on the Dow Jones Industrial Average, with the Dow at 50,000. It's not really that meaningful. Advanced declines. The last I looked at them just before I walked up here, we're still positive, close to 2 to 1.
So what we are also seeing, we've seen it almost every day where we've had these midday sell-offs, is that they've been shallow. Right, they're not. They don't get momentum. They catch a bid fairly quickly, to use an old Wall Street term. And what ends up happening is, whether it's a technical bounce or basically the buyers are patient and it's like come to daddy, that kind of a situation. But we've seen it time and time again over the last 3 weeks. The last 3 weeks have been a little bit lackluster. They've been market looking for direction. Right, and however, every time we've had one of these shallow pullbacks that I'm sure mainstream media is talking catastrophically, right, which it isn't, they catch a bid, they hit some technical support, and they're there, and the buyers are there, and the market catches a bid. And I think that's impressive, right? That means that, there's no momentum on the downside. The buyers are being patient. They're letting them come to you, and that is a positive market. That is a constructive market. And I think people need to understand that. And so if you're sitting at home, they're always going to be the bears. Look, the bears are deep inside the cave, right, with a slushie and a bag of Doritos, and they're just sitting there waiting for something to happen that's not happening. I would say a number of months ago or a number of years ago, if we would be having what's been going, that rekindling of the whole Middle Eastern conflict, this market would have been down 1,000 points. Just because of we're back at war again, everyone's going, oh my God, and now we're not seeing that.
Yeah, right. Look, but we've had a big move. We had a big move in the first half. The S&P was up 20%.
Yes.
The Dow's at over 52,000.
Amazing.
So we're going to have days when we go down 500, 600, 800 Dow points. We're going to have days when the S&P is down 1%.
Yeah.
But
you
have to put it in perspective.
Right. Well, you said that, you and I talked last week. You're talking about you've got so many of these chip names, software names that are up 40%, and then they have a 14% sell-off, and mainstream media is telling you, oh my God, there's a catastrophe. And in perspective, it's nothing more than it was a bit of a pullback after a spectacular rally. Right. The upside moves in this market, right? Trust me, the downside moves are not forgiving. The market is not at all forgiving. But I think one of the things that we need to understand and note is that you're seeing movement. Look, in the old days, all this buy and hold positioning that people had, the funds had in the market, I believe a lot of the market that used to be buy and hold are now trading. They need short-term gains to get through so that at the end of the year.
And also I think it's important that part of the hesitancy in the market and part of if there was a negative spin on the market that's developed over the last 3 to 4 weeks is that people were calling for a Fed interest rate hike before the end of the year because inflation is still a little sticky.
Problematic, yes.
And what we've seen in the last 2 days is could develop into something very significant because we had a CPI, Consumer Price Index report yesterday, followed by a Producer Price Index report today, both of which in the core and the headline number were much lower than what the market was expecting. And now people are just starting to talk today, maybe the Fed won't hike at the end of the year. Okay? Now, my feeling is if you get another month or two of favorable consumer price, producer price, and other inflation reports that the Fed keeps a very close eye on, which I think is what will happen.
Yeah.
Then all of a sudden you will start to get this feeling, you know what? Maybe we're going to have 1 or 2 rate cuts before the end of the year. If you think back to 2 years ago and 3 years ago, all of a sudden, like late in the year, we got 2 rate cuts. One of them was 50 basis points. We got 2 rate cuts for a total of 50 basis points late in the year. I think that is a much more likely scenario than what the market is pricing in right now, and that would be a very significant additive effect for investors as we get into the second half of this year.
Beautiful. I love it, Tim. I think, look, we're really painting a picture for you of, you know what, taking it, there may be, as I always say, there's a pebble in your shoe and a bump in the road, but net, the pullbacks have been super shallow. There's definitely clearly a bid in the market. We've seen scenarios that would have really broken the market down 3 months ago or a couple of years ago, not happening, right? That the reversal posturing of the Fed not raising rates possibly and perhaps even cutting shows resilience of the economy, and it shows that economically the market and the country are strong, and that we've got some, even though the global stuff, geopolitical stuff is controversial at best, that we're able to navigate our way through, and I think we're in a good spot. 52.3, 52.5 on the Dow, 75.50 on the S&P. Russell is performing well, you know, and it's spectacular. I think it's an incredible market, and nobody better to tell me all about it, and I appreciate it. It is July. July 4th is come and gone. 250 years of America is just like, it's in the books. Like, we signed the book with, you know, some of the greats of all greats. We're here on the floor of the New York Stock Exchange. You got to be in it to win it. Have a great day. I love you. I'm out of here.